Managing Director the Chairman and the Managing Director at Bharat Electronics, also joining us in the show. Good afternoon, ma'am. Thank you so much for making time and speaking with us. Now, helped by the low base of last year, your net revenues have grown by 91%. But the key question is, will this kind of traction really continue in your top line? And what's your revenue target for the entire year?
See, we have a strong order book. As you are aware, on April 1st of 2022, we had an order book of 57,000 crores. Well, now currently it is 55,000 crores. Out of that 57,000 crores, we have targeted about 15% growth for the current year. So roughly about 18,000 crores of turnover in this year. So orders are already there. So the timelines are also as per the contract is there for these orders to be liquidated in the current financial year. And another good aspect is the semiconductor crisis seems to be easing out. We have started getting commitments from the OEMs. So with all that, these are the drivers which will ensure that we are able to clock the turnover of about 18,000 crores this year.
EBITDA grew smartly, led by better operating leverage. Will margins remain around this 16, 17, 16, 18%? When can they go back to 24%?
For the current year, we are targeting a EBITDA margin of 21 to 23%. Currently, of course, it may be like that because the fixed costs are a little higher. But raw materials per se have gone up slightly, but then it has got compensated by a lot of indigenization work which is also going on. So overall, we don't see much of an impact on the small increase in the raw material costs going up.
But Ms. Ramalingam, you talked about in your first answer how the order inflow traction has been really strong. Do you expect this momentum to really continue? Because the last time we spoke, you did indicate that you're expecting an order inflow of around 15 to 20,000 crore rupees. Are you on track?
The order intake for the current financial year, we are targeting about 20,000 crores. Last year it was around roughly 19,000, and this year also it will be in the same range, but a minimum of 20,000 crores. And the major programs will be the Akash missile system for the army, which is around 4,000 crores. Then electronic warfare system again for the army, which is around 3,200 crores. Then we have some radars coming in from army, roughly around 1,500 crores. Then a number of naval equipments and systems which are going into various platforms like NGMVs, NGOPVs, fleet support vessel, etc., which is roughly about 9 to 10,000 crores. And of course, we have some other airborne EW systems which will be around 2,500 crores. So all these are already in the pipeline, and most of them the negotiations have also been concluded. And to add to this will be whatever is the base order will continue to come in terms of spares, in terms of AMCs, in terms of small orders which we have to liquidate in a shorter time frame. So those will also continue. So in fact, that is why we are telling it's a minimum order intake of about 20,000 crores is planned for this year.
What is the pipeline of orders for defense, non-defense? How do you see each segment growing?
The pipeline for defense is very good because we have the QR-SAMs, MR-SAM, then different types of radars like mountain radar, Ashwini radar, etc. coming in. So that will continue to grow maybe at a rate of 15 to 20% on a year-on-year basis. As far as non-defense is concerned, we have taken a major step. We have started developing products and solutions for not only the metros and the railways, but also for Airport Authority of India. But these all have to undergo some level of certification, which is a long drawn process. So maybe in a year later, maybe the generally 10% what we get from non-defense may start increasing. And our target is to reach about 25% in another 5 years.
Okay, ma'am, but analysts say that BEL is well placed to deliver the double-digit growth over the next couple of years as well. Are you on track? And what will drive this earnings? And are you concerned about the semiconductor shortage? Because I know you said that this year you are expecting a 15% growth. But my question is it likely to sustain over medium term?
As far as the margins are concerned, yes, we are on track. As I've been telling, that lot of cost reduction activities are also going on within the company. So with that only we are able to maintain this good margins. And as far as semiconductors is concerned, yes, there are still some issues, but they are easing out. So we have started getting commitments from the suppliers, and they have, as committed, they have started supplying. In fact, from whatever shortfall we had in the last quarter of last year, the part of it have got liquidated in the current first quarter of the current year. So with that, and even though the prices have slightly gone up, but then a lot of effort is there on the other side, which will ensure that we are able to compensate the impact of the small increase. And maybe another 6 months, of course, the deliveries from all the semiconductors OEMs are slightly delayed, but after 6 months to 8 months, I think it will fall in line, and then we would start getting them as anticipated.
Thanks so much for taking out time for us and giving us time and explaining.